Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Tuesday, March 4th. The ISM's Index of Non-Manufacturing Activity is released Wednesday. Normally, it is not much of a market mover, but it gained some prominence on that front after it plunged surprisingly in January to the lowest level since October 2001, which was during the last recession and following the 9/11 terrorist attacks. There is some question as to the reliability of the index given its extremely broad assessment of the U.S. economy outside of manufacturing. The survey of about 350 participants leaves doubt that the results accurately measure the complexity and relative stability of the economy. Briefing.com looks for a partial rebound to 48.0 from the 44.6 reading in January and 53.2 in December. The consensus estimate is for a slightly weaker 47.5. Now the dividing line between positive and negative growth is 50. The index was revised in January and now equally weights the four components of business activity, new orders, supplier deliveries, and employment. Prior to January, the Business Activity Index was the top-line measure. The new ISM Services Index now provides some rationale for the monthly movement, as the Business Activity Index is really just a subjective response to a simple question: is activity stronger or weaker than the prior month? The big picture is that the non-manufacturing sector is the heart and bulk of the economy. If the service sector turns weaker, the economy follows in lockstep. Briefing.com doesn't believe the small survey provides an accurate read on the economy, yet downward pressure is certainly a key indicator as the economy stands on the edge of recession. The equity market may be more inclined to believe that the index more closely follows the services economy, as another decline would firm up recession calls and continue to drag equity prices and consumer confidence lower, which is part of the downward spiral typical at the onset of recession. A partial rebound may cool some of the economic speculation that came with the January decline, and a gain back above 50, meanwhile, should spark some enthusiasm in the equity market. I'm Pat O'Hare for Briefing.com. Thanks for listening.